That's, of course, the take with regard to Reliance. Kunal, will come to you in just a couple of minutes. Let's go across. We have Rupesh Sankhe, Vice President, Institutional Equity Research at Elara Capital, joining us with regard to that very crucial move by IEX yesterday. Rupesh, what does this mean in terms of the hearing itself? Of course, there's no verdict out yet, but if the verdict were in favor of uh, the entire narrative of market coupling and could well benefit IEX, how much could that benefit be, and how much of a discount has already been built in to IEX? Firstly, give us a sense of that.
Yeah, definitely. If you look at it 2.5 years back, when the market coupling draft was in the public domain, and even if you take a reference of power market regulation 2021, clearly from that time onwards, we have seen multiple derating has happened in the IEX valuation. So earlier it was trading at close to 45-50 P multiple. Now it has corrected to 27-28 P multiple. So mainly because of a market coupling impact. And despite the strong volumes that we have seen in the last 2 years, so FY24 volume growth was close to 19%. Now in 9 months, we have seen 12% kind of volume growth. So there is not much impact on the fundamental. Fundamental is very strong. Only because of this market coupling, de-rating has happened. So certainly, an favorable outcome, or if members of CRC decides to withdraw this market coupling, that is going to be a huge positive for IEX, because in business as usual scenario, it's trading at close to below 22 times P multiple. If we take a market coupling into consideration, the DAM as a first product from Jan, which close to 35% of the overall volumes, then I think a lot of multiple EPS downgrade is definitely there. So we have to wait till Friday. What is the members of CRC decides, and then capital order there. But anything favorable in terms of to the IEX stock will see re-rating in terms of P multiple for sure.
Okay, Rupesh, hi, morning. IEX has argued that the market coupling could hurt power exchanges and could affect competition as well. What is your take on that front?
Definitely, because see, when IEX started its short-term market in 2009, see, the short-term market is currently 9 to 10% of the overall total volumes. Internationally, it is close to 30-40%. So if we need more and more short-term volumes to grow from 10% to 20%, we need more new products and things has to be there. So that innovation will come, and the people, discounts will come forward and will take the benefit of a lower price discovery. So definitely now what is happening, because a lot of liquidity and market participants are there in the IEX, so they are getting benefit of that high liquidity. But definitely, if market coupling comes into picture, you will have all the equal share for all the three exchanges, and there is no the efficiency in terms of price discovery. So only volumes will happen. So definitely it's going to be negative for a player like IEX. If a market couplings come into picture, it will have a lot of market share loss for sure.
Okay. Rupesh, how valid are some of the arguments that IEX and their lawyers and representatives have made, in your opinion? Do you believe that IEX has been fair and that they're not taking undue advantage of the kind of monopoly of sorts that they have within this space?
Yeah, I have no doubt in case in the process that have taken, because as per Electricity Act 2003, there is a provision that CRC can come out with such kind of the market regulation, and that is what they introduced in 21 also. So there is no as such that already there in the regulation in Act 2003. Also, when the draft was released, there was a lot of stakeholder consultation was there. But the IEX argument is more in terms of despite the SEBI finding of key officials having insider trading, and that data is also disclosed, still they gone ahead with this kind of market coupling just to benefit the key officials. And that is what they introduced in hurry. So their argument is more that take time just based on the simulation and off-market data rather than going with the real-time data. So, and there is no as such a big benefit that has observed. So if you look at data from December to March 25, with the simulation and data observation done, the benefit was hardly 38 crore on a quarterly basis. So their argument is also valid. There is not much benefits for the buyers and sellers. But at the same time, it has not taken into a transparent way. It should have given more time to understand their side. So that is what the IEX argument is. But in terms of regulatory process, I don't see any kind of issues there. But yes, as per the FTEL, CRC has to take this into consideration when such an order comes out, and it will have negative impact on the stock price. So that information has to be very, very secret. So key officials understand knew this information. They took an insider trading. That is not really acceptable as per the FTEL and what we can see.
Okay, fair point, Rupesh, and you've been very, very thorough about the answers that you've given. Now, give us a sense. What happens if the regulation likely goes through? How would you view IEX in terms of its valuations? Because that's where I think you're tilting towards. You're saying that this is a valid regulation, it should go through. And therefore, if it does go through, what would IEX's likely valuations look like? How much of the pain has already been priced in? And is yesterday's move something of an overreaction? Is that how one should assess it?
For FY26, we are looking at EPS of close to 5.3 rupees. And if market couplings comes into picture with DAM as a first product and then eventually post 6-9 months RTM, which will be the next product where you will see market coupling. So these two products contribute close to 78% volume of the IEX. If you look at the other products where IEX has 35% market share, so assuming that the market coupling comes into picture and their market share loss definitely there, and because of competition, exchange price, which is currently at 4 paisa, goes down to 3 paisa, then EPS, what is likely to be at around 5.4 rupees in FY26, will go down to 3.54 rupees. And because of this change in the fundamentals, I think P de-rating will also continue. So assuming 25-30 as a P multiple, 4 rupees kind of EPS, the 140 rupees looks to be a fair value, considering a market coupling scenario with a market share loss and exchange margins coming down from 4 paisa to 3 paisa. That is a scenario we are looking at 140 rupees as a fair value if market couplings comes into picture.
Okay, Rupesh, good to be chatting with you this morning. Thank you so much for your time, and thanks so much for putting this entire matter so succinctly and explaining it very well to our viewers. Thanks once again.